Okay, good morning, everybody. Welcome to the MarketSmith Advanced webinar. And today we are going to be talking about faulty patterns evolving into constructive bases. A quick introduction here. My name is Irusha Pires. I'm one of the product coaches at MarketSmith. And I just want to make sure we're all comfortable with the webinar software functionality. It's located in the top right-hand side of your computer. Enter in your question, and we will make sure to answer by the end of the presentation. And also a quick disclaimer before we get started. All of this should be considered as educational purposes only. Please don't take it as a recommendation to buy or sell. And so let's get into the objectives. Now, some of the stocks that we're going to be talking about here really are going to capture how hard they are, how hard some of these leading stocks are. They have the potential, but some of these stocks, for whatever reason, they take a year or two to really get going. And so they will do everything they can to wear you out of the stock. They will wear you out, they will scare you out, and they will make you wave that white flag right before the stock is ready to go on a huge run. So the key here is to keep working on your chart reading skills, because during this year where it's just getting, the bases are getting more and more constructive, there are plenty of flaws in these earlier bases. And so you want to learn and pick up those details to try to avoid some of those so you can hang around long enough. Because remember, it's not just avoiding some of these flawed bases to protect your capital. It's also, you're also protecting your mental capital. If you get shaken out of a stock 2 or 3 times, chances are you're not going to try it the third or fourth time when it's really ready to go. So when we talk about faulty bases evolving into constructive ones, this is what we're talking about. A stock that forms a base and breaks out and it has plenty of flaws and it fails. It builds another base, breaks out, fails. A third one, fails. And then finally, when you've given up, when you don't want to touch this stock anymore because you've lost so much money on the stock, you've just gotten whipped around, it puts a beautiful constructive base. And some of these stocks, when they're ready to go, they have the potential to become huge, huge winners. And so here is Qualcomm. And back in 99, it went up 1,900% in 53 weeks. So just make sure to hang around long enough and pick the ones that have the least amount of flaws, because then maybe you can catch a little bit of some of these runs when they're ready to go. So let's start off with the first example right here. And so here is a consolidation, and it's 52 weeks long, and the base depth is 22%. And so there are a couple of flaws that I see here right off the bat. Now, the first thing is that it's a consolidation. Okay, so a consolidation is not the normal type of base we're looking for. Remember, we're looking for a cup with handle. We're looking for a double bottom, so a base that reflects institutional accumulation. When the MarketSmith pattern recognition picks up a consolidation, what it's generally picking up is a trading range. Okay, and so it hasn't done enough, this stock hasn't done enough to really qualify for a cup with handle or a double bottom. And so it doesn't necessarily mean that a consolidation can't work. It just means that the odds are a little bit less. Now, the second thing here is that this is a large base. Okay, so a lot of times in my experience, when a stock breaks out of a large base, usually it'll come back in and form a smaller, tighter base. It just spends so much time building this base that a lot of times once it finally gets going, it needs to come back, test that support area, make sure, because remember, once it breaks through here, that's breaking through significant resistance. A lot of times it will just come back and test the top of the support and to make sure that this is a significant area here. So you have this stock right here, and it's breaking out. So at this point, if you really like the story, you can try it, right? Remember, just know that the odds are a little bit less of them working at this time. And so the stock breaks out, comes back in, finds support on the 10-week line, so it's still okay at this time, and then it fails. Okay, so this is part of trading, right? You're going to try some of these stocks, and they're just not going to work, right? I'm sure we've all gone through that. We've gone through it here plenty of times. And so the key is you have to know what you're getting yourself into, and before you make that trade, you always have to plan that trade. And so if we go back here, what you want to do is you plan your trade and say, okay, these are my exit strategies. If it goes up 20%, I'll get out. If it comes back down 7%, I'm getting out, right? So at this point, when it fails, there's no hesitation. You're cutting your losses at this point. Don't fall in the trap of saying, you know what? Okay, I'll hang around a little bit more, see if it comes back. Okay, I'm only down 10% now. I'll sell when it gets back up to when I'm only down 7% again. Oh, okay, now I'm down 20%, right? Now, I've done this, and I've gotten caught in this trap, and it's so much harder to recover from a 20% loss, all right, than that 7% loss. So whenever you make those trades, make sure you know where you're getting yourself out. Now, this stock got even worse the next week. Now, a significant thing happened here. It undercut the previous base. And so we're resetting the base count. We're shaking out even more weak holders here. So while this stock is a disaster right now, and it's really shaking out, it is doing something constructive here where it is just getting rid of everyone who's not committed to the stock. You jump out a couple of weeks later, comes back in, tests the low, and then finally, it starts to get some subtle signs of accumulation here. If we jump out a little bit further, now the market Smith pattern recognition is picking up a cup here. And then we jump out a couple more months, and it puts in this huge 51-week cup with handle. Now here, remember, this is still a large base. We're getting a little bit more constructive here, right? We've gone from a consolidation and to actually now the market Smith pattern recognition is picking up a pattern that we recognize, one that's reflecting more institutional accumulation. Now, once again, this is a pretty large pattern. Okay, so you want to just keep that in mind. And also the base depth at this point is 31%. And so it is a little deep at this time. Now, the maximum usually for the normal basis that we look for is 31%, right? And so this is 33%. You're kind of pushing it at this point. So these are a couple of things that I see with this one. But if it breaks out, if you really love the stock, sometimes these can work too, right? So you always it's always a probability game. If you're going to go in it with the odds a little bit more against you at this time, just adjust for that risk, go in a little bit smaller. So here the stock breaks out and then it fails. Okay, so do you guys see how hard some of these stocks are? You have this stock on your radar, you know the story, and you're trying a couple of times, and it's already whipped you out a couple of times. And so these are on the cards. Okay, some of these stocks with potential, they're not going to act really nicely, right? They're not going to break out and just take off. And so you have to be prepared for those and hopefully avoid some of the ones that have a little bit more flaws. Now, if we jump out again a little bit more, an 8-week cup with handle, base depth of 14%. Okay, so do you guys see already how this is becoming a little bit more constructive, right? We went from a consolidation to a large cup with handle to now a smaller cup with handle. Okay, and this one's 8 weeks long, 14% depth. Now, we're getting closer here, right? Now, ideally, the cup with handles that I like to buy out of, they're generally 8 to 10 weeks long. And so this definitely looks closer at this point. Now it tries to break out, goes sideways, and then it fails. Okay, so some of these stocks are just vicious like this, right? Now one thing here, and this is a little bit more of a subtle point right here, but notice how I jumped out a few more weeks after the stock failed, and it didn't blow up like the other two times, right? Once it broke out of this consolidation, it fell apart. Tried to break out again, it fell apart. Now this time it came back in and it was a little bit more, it kind of held a little bit better, right? So you're starting to see a little bit of a character change in the stock. And if you jump a few more months out, now it puts in a 19-week flat base up to 9%. Notice that how the stock is getting a little bit tighter too, right? So the depths are getting tighter from this 31% depth to a 14% to 9. it jumps out again. Okay, so now are the odds of it working higher here? Yeah, I think so. They are, and here it comes back in tight again. So it doesn't necessarily shake you out, and in fact, it puts a 7-week flat base up to 7%. Okay, do you guys see how it's getting even tighter? And so let me ask you this: where during the last 2 years on this chart do you see the stock going this tight for this long? Okay, so do you see how the character change is taking place in the stock? How it's becoming tighter? And so it breaks out again. So now it tempts it again. And then finally, we get a little bit of a lift. It's starting to hold the gains a little bit more. And I'll jump out a little bit more for this. And this is Boeing, and it ended up going 74%. So some of these stocks are quite a bit harder, right? They are just going to take their own time. They're just going to move at their own pace. But the one thing is that the accumulation will still show up on the chart. This stock, it goes from 31% to 14 to 9 to 7%. Okay, and then it finally works. So let's go to the next example here. And so here is another weekly chart. Now you can see it's gone up on a decent little bit of run here, and now it's started to form a cup right here, which kind of came back in. Now we'll jump back out again. And so now you have a cup with handle here, a base depth of 31% that it breaks out of. Now these points right here were within the large consolidation, so we don't have the pattern recognition picked up because it's not picking up the chart right here. So this is very, very kind of subtle, but what you want to see here and learn is to really learn how to read the charts on your own. Use pattern recognition as a learning tool, right? You want to start picking up the patterns on your own to see if your eyes can adjust to it and pick them up as you're going through these charts, right? So it forms this cup with a handle, comes back in, forms a cup, comes back in, and now finally forms a cup with a handle. So now the key thing right here is that notice how this stock kept getting tighter and tighter, right? And now finally the pattern recognition is picking it up. So there is a point here where you might not have even seen this in real time, right? But finally the pattern recognition is picked up. When you're analyzing the stock, you definitely want to start picking up on the characteristics here, how it is getting tighter, how it's testing the lows here and not making a lower low, right? And finally, you get this nice little cup with handle. It breaks out. And then finally, we get a lift on this. And this one comes back to the 10-week line. So honestly, if I had tried it here, I probably would have gotten shaken out at this point. And that's okay. You are going to get shaken out of some of these stocks. So it's okay to be shaken out. You just don't want to take them off your radar completely, right? Because some of these stocks, they just may be getting started. Now this one, it finally puts in another cup. And at this point, if you hadn't gone back in, which is totally fine, it's breaking out again on powerful volume. Starts holding the 10-week line, and I'd probably get shaken out here again. So this one went on a really nice run. This is Mosaic, 561% from the pivot. Okay, so once this one really got going, it was pretty much gone at this point. But notice at how the base steps, once again, the same concept, 31% to 22 to 20%. Okay, tighter and tighter and tighter, and then it finally works. So let's go to a third example here. And as you can see here, this was an IPO back in 2000, and it really didn't get that far at this point, getting choppier and choppier at this. So this right now is pretty much of a disaster. And so chances are we're not going to be in it at this time, right? But it undercuts the previous base, so you're resetting the base count. And then finally, the marks with pattern recognition picks up a weird-looking cup with a handle here, a V-shaped cup with a handle, base depth of 23%. And so, you know, this doesn't necessarily look like a normal kind of cup with handle here, right? So usually whenever I see something like this, yeah, I'm probably not going to try it because it just doesn't look like the normal ones that the previous winners have shown. But to Mark Smith pattern recognition is picking up, it's qualified, it's done enough to show this cup with a handle, and then it breaks out on pretty good volume. Okay, so if you really like the stock, if you know what odds you're going for at this point, you can take a shot at this, right? Starts to work a little bit and then comes back in. And then it finally fails. Okay, so you see how frustrating that one is? Now we jump out a couple months later. So remember, it's okay to be shaken out of a stock, but if it's a story that you really like, you don't ever want to take it completely off your radar. You want to put it on that universe list. Because for every bull market, there are only so many great companies out there, especially new companies, that have that potential to change everything. And so while it didn't work for you that first time, it doesn't necessarily mean that it can't ever work, right? So you never really want to completely take it off your radar, put it on that universe list, check it every week or every 2 weeks, and keep track of it, right? Because a lot of times those fundamentals, eventually the market will catch up to it if they really keep those earnings growing, those sales growing. And so you can see right here that this cup started becoming a little bit more constructive, right? So compare this V-shaped cup with this more U-shaped, right? So does everyone see how this has become more constructive? This one right here definitely looks more like the types of cups that we've seen in the past that end up working, right? So this is a really nice U-shape. It's gone tight in the handle for a number of weeks, based up to 27%. Okay, so these are all very good characteristics for this cup with handle, and then it breaks out. And then finally fails. Okay, so do you guys see how hard some of these stocks are? Where they will just do everything they can to wear you out of the stock. And now if you take it off your radar, you say, hey, you know what, I've tried this 2 times already. This thing's never going to work. You're going to miss a even more constructive cup with handle. Okay, so if I go back here, 18 weeks long, base depth of 23%, and it breaks out. So do you guys see here how it's becoming even nicer? Right? Even more U-shaped at this point. Tighter depth, smaller depth right here. And breaks out again. Now this one is, as you can see here, this is just one of these bucking bronco type of stocks right here. It breaks out, comes back in, and at the end of the week reverses. Take a look at that volume coming back up, comes back in again, right? So one thing here to get out of this is know the character of your stock. There are some stocks like this stock that, I already know right off the bat that I'm going to have a very tough time handling. And so the way I'll do it if I'm going to try it is I'll always adjust for that risk. I'll always go smaller because I know if I try to go with a normal position, there's no way I'm going to be able to handle it, right? I'll be shaken out left and right at this point, right? So here, tries to go up, comes back in again. Now, if I have a smaller amount, chances are I'll be able to hang on for that ride. Now, the next week, this was earnings at this point coming up. So really take a look at that volume now. So there's really, on a volume basis, it's no arguing that someone wants to get into the stock, right? Finally out of this nice cup with handle, now you really get the obvious, the explosion out of the base at this time. Earnings really confirmed it to the funds here. They started falling over each other to pick up shares of this stock. And then it finally starts to work. Now, you're up 35% on this stock from that base. And maybe you bought it after the earnings, right? Maybe as it pulled back, you're buying more at this point, right? So you're up a decent amount at this time. So one thing you want to consider, especially in markets like we are right now, it's not a bad idea to sometimes take some off the table. And so you want to keep that always in mind that, hey, I have some. Maybe I should take some off the table at this point. It finally did work. And so I should take a little bit off. Because sometimes if you don't take those profits, a lot of times the market's going to take it back. And then this is earnings again. So some of these stocks so tough to handle right here. But then finally it starts to work, and this was Intuitive Surgical in the beginning of the run, up 163% from the base, 45 to 27 and 23. Okay, so the base is getting tighter and tighter and tighter. And then some of these stocks, even after they torture you going through these bases, they still make it really difficult. Okay, so know the character of your bases, but the key is notice at how this one got more and more constructive and then finally worked. So let's go over one more example here. And so as you can see here, here's another choppy stock, comes back in, starts forming this base, and now you have a 33-week consolidation, base depth of 35%. So the question here is, are you buying this stock right on the breakout? Right? So really what you want to do is go back and go over some of the stuff that we discussed here. The first thing is there's a consolidation, right? So remember, the consolidation, the odds of it working at this point are a little bit less, right? It hasn't picked up, markets with pattern recognition hasn't picked up that institutional accumulation. And so it's picking up more of a trading range. So you want to keep that in mind here. Now, another thing is it was a little bit larger consolidation too, right? So those are a couple things that you want to start really looking into details for to say, okay, is this a really nice base or not? Are the odds of it working higher or lower at this point? Now, I got some of these comments right out of the How to Make Money in Stocks book. And so this one hung in there for a little while, couple months, and then it broke down again. And so one of the flaws that was pointed out in this stock was here is that there were just too many weeks in the lower half of the base. Okay, so definitely go back to How to Make Money in Stocks. There's a lot of little gems that you'll see in those first 100 pages with all the charts of the greatest winners. And so here was a clear flaw that was identified by Bill O'Neill, where just too many weeks in the lower half of the base, which reduced the odds of it working at this point. And notice that how once it broke out, it came back and it just kind of tested that area again, right? So it came back and tested that area. And so now what does it do? Kind of built another 32-week consolidation, base depth of 35%. And so here, it's once again a pretty large base, but the depth is 35%, right? So those are a couple of things right off the bat that you're kind of pushing it here. The odds are a little bit less. If you're going to try it, you definitely want to go in smaller. So the question is, are you buying it at this point? So it comes back in pretty harshly, jumps out again. And so the flaw in this, in the book, not a correct pattern, 3 bottoms. You guys see how the little details that are being pointed out here? Okay, another thing that I highlighted was take a look at the weekly volume, this huge weeks of volume coming in, right? So there was some distribution going on there. So once again, the odds of it working were a little less at that point. And then you also can see a lot more distribution came here. So those are 2 flawed bases that, honestly, with a little bit of chart reading skills, you can probably avoid, right? And kind of sidestep and not only protect your capital, right, from kind of getting whittled down, but also protecting your mental capital, because those are 2 right there where you're ready to give up on the stock. Goes again. So here highlighted. Now with the stock, it already broke down to the hearts, huge volume to down right here, right? Now it's just consolidating with the tight areas. When I look at a stock like this, my initial impression is, okay, it can't find any buyers here, so chances are higher that it breaks to the downside. But it did the opposite, right? So sometimes when you're looking at this analysis, if it starts doing the other thing, what you want to recognize, maybe that support is stronger than you assumed, right? And so here, it goes through and puts in another base. So the question is, are you trying this one, right? So this is the 3rd consolidation. Remember, another longer base, depth 37%. Are you trying it at this point? And the answer is no. So these are 3 examples right here that, once again, too many weeks in the lower half of the base. So what you want to do is go back and study this. Notice at how pattern recognition still hasn't called and picked up a normal base on this. And then finally, 3 times, if you're just trying to buy out of the bases without looking at the details, you're probably giving up. And all of a sudden, suddenly, you're looking at a cup with handle. Look at the marksman pattern recognition, picking up a cup with handle. And then you get the breakout, right? And so the question is, are you buying here at this point? Right? And take a look at that volume. Okay, so take a look at this, because what you want to do is go back in MarketSmith and study some of these really tough stocks. This is a first base in the 2.5 years that is one that's reflecting institutional accumulation, right? Huge volume coming into it. And of course, now this one ends up working, right? And so this was Qualcomm, what we started off with in the very beginning. Right, so we just walked through and how treacherous some of these stocks are, how frustrating they are, and if you don't learn to read charts and pick up on some of those details, then you really want to, then you're really setting yourself up to buy out of a flawed base, and you're going to get frustrated and void and miss out on the stocks that end up going on the larger runs. Right, so hopefully this was helpful for all of you. So let's go to put it into practice right here, and so get familiar with some of how some of these bases evolve into more constructive bases. There are a lot of flawed bases out there, right? And so you want to keep working on those chart reading skills to try to avoid some of the ones that are more flawed, kind of like the last Qualcomm example. Those first 3 bases that we went over, yeah, with a little chart reading skills, you can avoid those. Right, there were plenty of flaws, not just the ones that I picked up, but even the How to Make Money in Stocks book, they highlighted even more right there. And so definitely, please keep working on your chart reading skills, and you'll be able to sidestep some of those traps that the market can set up, that the stocks can set up. And of course, remember, everything is revealed in the price and volume action. Once there is that true accumulation there, you'll start seeing those bases forming, the coupled handles, double bottoms, flat bases, okay? And so remember, those show up throughout the history of time for these leading stocks. And so when they're ready to set up, you will start seeing them on the charts. So hopefully this was helpful. Looks like we're running out of time, but let's take a look at some questions right here. And okay, I'm just going through the questions here. Oh, okay. Well, we have a question here from David. Can you explain why the price action becomes tighter during institutional accumulation? Yeah, there are just more buyers coming in to buy shares at those prices, right? So there's less trading at that point. They just keep sucking up all those shares, so the supply just starts to run out of there. So that's the supply and demand that we talk about. There are certain prices there are a certain amount of shares at $30, at $32, and once those all get sucked up by the demand, there's no more, and then the price starts rising again. And so that's really what forms the basis. And so what I would do, David, is to go back and study some of the cup with handle and the double bottom, really to go and see, okay, what's happening during the stages, the points on that base, right? As it's coming down, there's a lot of supply. When it starts building the bottom, the U-shaped bottom, no one's really watching. There's someone just slowly buying it, but the volatility drops, right? And so all of the shares that are available are just slowly sucked up there. And then once it starts building the right-hand side, now you start seeing that cup. But all of the bases, the reason why we're looking for is because they are demonstrating and displaying that accumulation. Okay. Oh, good question here from Pritesh. Yeah, how to interpret the RS line in this type of situation? Yeah, that's the tricky one with some of these stocks. Some of these stocks are going sideways for 1-2 years. So the RS line is not going to give that real good indication for these stocks. And so you really are going off of price and volume at this point. You're not going to have an RS line hitting a new high. And that's like everything else in the market, right? It's never going to be perfect. Not every great stock is going to have everything. And so in this case, the RS line is going to look terrible, right? But you're looking at the price and volume action, and you're really waiting for the proper setup at that point. And so you're really going more on the story, and then of course you're looking for that super powerful breakout. Once the stock starts working, you're going to see that RS line catch up to it really quickly. Okay, that looks like those are all the questions that we have right now. So let me put up the contact information. And so any other questions that come up, definitely feel free to give us a call at 1-800-424-9033 or send an email at reachus@marketsmith.com. And of course, we're on Facebook and Twitter these days. So on Facebook, search for MarketSmith, and then Twitter, our Twitter